And it's 10 a.m. right here in Lagos, Nigeria. Good morning, good evening, wherever in the world you're watching from. It's Business Morning, live from Channels HQ. Hope your morning is going great. Let's kick off with the markets now. Let's see what's happening with a global grains market. We see wheat prices there edging lower this morning. We see Chicago wheat futures that lost more ground as an extension of a deal to allow war-ravaged Ukraine continue exporting grains, ease concerns over world supplies. Corn, that slid to trade near an 18-month low, hit in a previous session after China canceled purchases of U.S. cargoes, and as favorable weather helped newly planted crops in the Midwest. We'll drill down on drivers in that market. To the global oil market now, we'll see oil prices fell today as traders warily watch for signs of progress on talks to raise the U.S. debt ceiling after surging nearly 3% in the previous session. We'll see there's optimism over U.S. fuel demand. Brent crude futures dipped about 29 cents to $76.67 a barrel, while U.S. WTI crude that dropped 32 cents to $72.51 a barrel. We'll also drill down on what's driving prices in the oil market later on in commodities market update. And as President Muhammadu Buhari's led administration draws to a close, the state of the economy with considerations to macroeconomic factors have been part of current conversations. Questions are asked on inflation, which has gone from single digits in 2015 to double digits in 2023. The value of the naira and the economic policies of the administration also on the fore. Our business correspondent, John McCoy, captures some of these issues in this next report. Take a listen.
I would like to thank the millions of supporters who believed in us.
President Muhammadu Buhari assumed office after winning Nigerians' vote on the promise of change in 2015. Safe to say that the change did not consider recession, but that is what the country was plunged into just as the administration was settling in. Global oil prices, which was at about $64 in June 2015, dipped to $36.68 a barrel by December 2015, lower than the benchmark for the year, which was $38 a barrel. The administration would have to deal with a second round of recession by the third quarter of 2020. With the spread of COVID-19, economic activities were halted. GDP, which was at about $486 billion, according to the National Bureau of Statistics in 2015, declined to $404 billion in 2016, and the country slipped into recession. The then Minister of Finance, Budget and National Planning, Mrs. Kemi Adeosun, was constantly in the eye of the storm.
The economy is actually in very, very good hands, and we're doing absolutely our best to get through this difficult period. We have released 74 billion naira to work in 2 months.
In February 2021, the National Bureau of Statistics announced that the country had exited recession with a slight increase of 0.11% to the GDP.
I will rate the government high. And why would I say that? One is response to COVID-19. The second is response to the recession and the crisis of NSAS protest.
While the economy survived recession, inflation was still embedded. From a single digit of 9.01% in 2015, inflation has increased to 22.22% as at April 2023. And this is in spite of Monetary Policy Committee rates hike.
There's been reduced supplies or reduced production, which has led to increase in prices. So when you look at the bottlenecks, infrastructural bottlenecks in terms of transportation, you also look at the insecurity in most of the farming areas that has compounded the rise in food prices.
As inflation surges, the naira loses value. Access to foreign exchange becomes more of a struggle, especially for the real sector.
We've gone from 2015, where we started the year with 150 naira at the time. 2016, we entered the 360 naira to $1 period. And between 2016 and now, we're talking about 750 naira to the dollar.
We assess our foreign needs through the parallel market, which rose between 750, sometimes 780, sometimes 730. That in itself is killing.
The Central Bank of Nigeria has over time sought diverse ways to boost FX supply for businesses and individuals, one of which is the RT200 program, which the CBN governor, Mr. Godwin Emefiele, says brought export proceeds repatriation into the country up by 40% to $5.6 billion in 2022. The CBN also took other steps deemed necessary to stabilize supply and prices.
The Central Bank will henceforth discontinue the sale of foreign exchange to bureau exchange operators. B, the bank will no longer process or issue new licenses for BDC operations in the country.
Unfortunately, the supply and price of FX continue to elude solution as multiple windows continue to exist and the value of Nigeria against the dollar continues to deteriorate. The existence of multiple windows for the dollar, among other issues, have built conversations around harmonizing monetary and fiscal policies.
This administration will continue to ensure that our fiscal policies are supported by a robust and contemporary monetary policy that recognizes our peculiarities in the midst of the growing global economic difficulties.
In the face of this, borrowing increased as public debt, which was about 12.6 trillion naira in 2015, had surpassed 27 trillion naira in 2019 and set to be above 77 trillion naira by June 2023.
By the end of the year, my estimation is that the debt profile will get to around 80 trillion. That is massive, and that will be it's extremely difficult to manage. We will begin to see a departure.
The debts may continue to increase, with fuel subsidy payment between 2015 and 2021 hitting 13 trillion naira, according to the Secretary to the Government of the Federation. Although the federal government had announced the end of payment by June 2023, based on the 2023 budget provision, the plan has been put on hold in spite of a planned loan of $800 million from the World Bank.
We have to take this necessary step of removing PMS subsidies, but we will ensure that the recovered revenues will be used for the benefit of everyone, and we will help try to provide immediate relief.
Another policy which the Buhari administration will be remembered for is the Naira redesign. It seems more Nigerians will remember the frustration to access their funds, which in some cases turned violent. This may be what will give a final impression to the performance of the Buhari administration. As the Bola Tinubu's administration comes on board with a promise of renewed hope, it's not a clean slate, as there are important decisions to be made. Removal of subsidy, debt burden of about 77 trillion naira, debt service to revenue ratio surpassing 80%, and running inflation. Nigerians will be watching and hoping that the right decisions are taken to put the economy on the path of growth. Ini John Mekwa, Channels Television News.
Yeah, quite a lot for the incoming administration to do, looking at that report regarding the economy. Well, let's kick off the conversation now, talking about inflation. We see, according to the National Bureau of Statistics, Nigeria's annual inflation rate rose to 22.22% in April from 22.04% in the previous month. Report also shows food inflation rate quickened to 24.61% in April from 24.46% in March. And we know food is a big part of spending for many Nigerian households. So what can the incoming administration do to promote and help Nigeria's agricultural sector? Joining me now is Tunde Banjoko, MD, Banjoko Farms, joining me via Zoom. Great to have you on the show.
Good morning, Ladi. How are you today?
Good morning. I'm doing fine, but now we have fears of famine see the World Bank warning that countries like Afghanistan, Burkina Faso, Haiti, Somalia, South Sudan, and Nigeria are experiencing catastrophic levels of food insecurity, and they're painting a picture of, famine, that's coming, and obviously we know we cannot live without food. Even though you can buy it, you might not have, the food to buy. How are you seeing this report by the World Bank?
It's a scary one, but it's what we can all, attest to on a daily basis. It's something we all see when we go out. And maybe I'm even tempted to say, is the rate not even higher in the market than what is being even projected by the NBS? But what I'm looking at is last year, doing it year on year, even though I'm not an economist, it was about 18%. The food inflation rate was about 18% last year. And now it has gone to 24%. And like the report INE gave earlier on, when you look at it in the last maybe 8 years, it was at single digit, and now it's at a double digit, and it's likely going to be higher. So my concern is the drivers of this inflation are still not being addressed. They are not being addressed. And because they are yet to be addressed, the figure is likely to go higher, and the situation is likely to persist. So what the World Bank and everybody is saying is true. And I think, like you rightly mentioned, the new administration has to start addressing these drivers of these numbers. It's scary, it's real, and I think it's something that is a concern to anybody.
Yeah, and everyone is.
And maybe I should also say this at this point. During the same period, you look at FAO releasing their own report, and in their own report, the cost of food of some items in the international market has been dropping in the last 12 months. But the countries that are not benefiting are those that rely on net importation, those who have devalued their currencies against the dollar, against the euro, most of which are in developing nations. You look at cereals have gone down by 7.1% because of what Australia put into the market, climatic condition in the European communities. You look at, soy oil and some other products coming down by about 4.2%. You look at what maize is doing in the global market because of what Brazil pushed into the market. I think it came down by about 4.2%. The same thing with rice, with what Indonesia is doing. So we now need to start addressing those issues that are driving our rate so that we reverse this trend and not plunge ourselves into serious food crisis. Thank you, Ladi.
Yeah, but let's break it down. At this time, everyone is talking, agenda setting, for the incoming government. What do you want to see in the first 100 days to at least give us a clear direction on avoiding a famine, in this country?
Okay, avoiding famine in the first 100 days, like I said earlier on, the drivers of these things are the things we'll be interested in. What are the drivers? Insecurity in the north has, sent a lot of farmers out of their farms. That has reduced the production of food in Nigeria and is pushing price on the high side. We look at the effect of the flood we had in 2022, over 300,000 hectares of farmland, 1.4 million people displaced. And then we look at even the value of agriculture that was lost, about 700 billion, even though the entire thing was about 4.2 trillion, but agriculture was affected by 700 billion. So, and now 2023, we were told the flood is likely to be higher than what we saw in 2022. So in the first 100 days, we will want the issue of insecurity addressed, where farmers are, confident enough to go to their farms in those areas, because those are some of the large baskets. We'll talk of the North Central, majorly the North Central, the Northeast, and even some other part of the country. So the issue of insecurity should be number one on that list, that boost the farmers' confidence to go back to their farms, to be able to produce enough, and then we'll have good distribution. Then we also, in that first 100 days, we need to see in the appointment of those that will be driving our agri policy, We need to see that these are real technocrats and not political compensation, because that ministry seems to have been a bit docile in the last couple of years. We are not sure of those driving the agri policy, the food policy, and that's why some of us are convinced it's like in a state of comatose. The activities has been low in that sector, so we will need in those appointment of those driving that sector to be people who are concerned about the state of the economy, concerned about the state of agri, and then are willing to drive it. Not just, it's not just about the certificate this time around. We need those who knows what each geopolitical zone have comparative advantage to bring to the table, and they start setting up policy. We need to start talking about the private sector, public participation. It should be a collaboration. That's what I'll be looking at in the next 100 days. I want to see who are we appointing as the Minister of Agriculture? Who are we appointing? What is the government going to be doing about the insecurity? And then, of course, maybe one sharp one will also be transportation is adding to this cost. Maybe those are, like you said, first 100 days, not the whole administration. So those will be some quick pointers for me.
Yeah, because globally we've seen that the first 100 days are able to give, a direction. Yeah, so we know where we're actually, going with the new government. But let's look at, some of the policies now from the outgoing administration. And I want you to rate, most of those policies. We've seen the Anchor Borrowers Program, huge interventions, by the Central Bank of Nigeria. How have they performed so far?
Larry, you want my CSC document withdrawn? So, okay, but
I don't want it withdrawn, but I just want you to tell me exactly how has it been?
No. In fairness, some of the policies...
Because there must be some positives at least.
Yeah, some of them have done well. Like the Anchor Borrower was one of the first initiative of the Buhari administration in 2015. I think that was done in November 2015, and they've released about 1.09 trillion into that project. And according to statistics, about 4.5 million smallholder farmers, 21 commodities have been funded, so many factories have been funded. So I think, in fairness, that has impacted some of the projects. We've seen the policy on rice that brought some new rice processors into the industry. We've seen the policy with cassava that has boosted some of the processing. We've seen now the usage of cassava in the country to ethanol, to starch, to flour. There have been some, encouragement. So some of those policies, in fairness, have done well, have boosted. We've seen people also now seeing agriculture as a viable means to turn around the numbers, because food inflation is a major driver of the inflation rate. If that is addressed, I'm sure other things will be addressed. So some of the policies have done well, but like I always say, with a proper review, they can do better. And then maybe another one, like the seed policy, trying to have an agency overseeing a seed policy is also a good drive. And a lot of, youth empowerment programs to drive agriculture has also done fairly well. So I think I'll give that to him. In some areas, they've done well. So let's not be pessimistic in all that's a very good one. And I'm as objective as possible. I'm sure you know I try to give my objective remarks on things.
All right, but, looking at the data, so far, we've seen the food price index that has soared about 263% under the Buhari administration. Do you think, if we go back, if it was any other government, we'll still be in this position?
No. If it's somebody else, we probably might not be in this position. What I think we've been trying to do in the last couple of years is using monetary policy to address inflation only. And that cannot be the only thing addressing our inflation. So, like I said, when we look at the appointments, if there's no performance, we should be willing at any point in time to change the drivers of the policy. That has not been seen in this administration, to see them putting the drivers of the policy on their toes to deliver. Most of the ministers, I was still in a forum yesterday talking about agriculture, and it's amazing that a lot of farmers do not know the name of the current Minister of Agriculture. And I have to tell them this is the name of our minister. And some of them are saying, I'm hearing the name for the first time. These are big players in the industry, and they don't even know the name of their minister. And some of them don't even know about the programs of the administration. So I think this administration didn't pay attention to, one, proper evaluation of his appointees, maybe two, again, evaluation of the policies and programs, and maybe three, in terms of projection. I think the president once mentioned that even those that should be talking about the programs of this administration are not talking about them as much as they should. So people don't even know that some of these, like the seed one I mentioned, that some of these things exist, some of these other policies exist. So if it was somebody else who knows the value of the media, information sharing, evaluation, and would have done better, and also using the other mechanics. Like, we need serious domestic restructuring to achieve some of the things we are talking about. It's not just about monetary policy. You can't have a government where, a PA will have 4 PAs, a special advisor will have 4 special advisors, will have special, all those bottlenecks and costs are really avoidable. So somebody else could have probably seen things better and done better. That's my honest.
All right, let me take you to the poultry side of things. We've discussed with a lot of poultry farmers on the show, and they've raised alarm about the egg glut in that industry. They have so many eggs, and they can't sell them. We've seen most of them, they've actually gone bad. They have to bury millions, of eggs. And I want you to tell me, is the situation getting any better there right now?
Looking at what we still saw early this year in terms of the egg glut, I can say it's better, because a lot of farmers still were burying their eggs. As of this year, February, March, April, we still saw a lot of them doing that. And in the same country, good enough, we have processors who are already converting these eggs into egg powder. But the capacity they have is small. One is very close to your office, well, I'm sure I can't mention her name, very close to your office, already converting egg into egg powder, but her scale is very small. She needs funds for expansion to be able to accommodate as much. And this is the issue, Ladi. She has the capacity to convert egg to egg powder. She has orders for the products within the country from those who are importing, but she can't meet up their demand because she doesn't have the fund for expansion. So, Adibin, we're in a situation whereby she has the fund to expand. She will be able to take from the farmers, convert it to powder, and be able to supply those who are buying or importing, and now putting pressure on our forex. So this thing is a chain. So we have to address it. Once we address that, but it's still a major issue, and one of the consequences of that I've observed in the last 12 months, thereabout, a lot of poultry farmers are shutting down or stopping the production of eggs and moving into breeders, meaning all they want to just do is produce for meat rather than for egg. And we need all. We need the meat, we need the egg, and even for the animal husbandry, we need the milk, we need the meat. But people don't have the infrastructure and the finance, though they have the expertise. Some of them have the basic required capacity, facility and the technical knowledge, but they do not have the funds. So that has to be addressed. Once that is addressed, then the issue of egg glut can be resolved, because it is actually not, it's not beyond us. It is possible. The same lady I mentioned that is converting to egg powder is even exporting already from the little she has. So imagine if she's able to meet the industrial use of egg powder in Nigeria. You can imagine the jobs she'll be creating in her factory. You can imagine the employment and other things, and she'll be reducing pressure on our foreign exchange. So I think what I'm saying again is, so we need to start funding these people that can take these issues and be able to expand and benefit from other things. That's right. So it's still a major issue, and this administration should look at how can they support these medium-scale processors to be able to resolve these issues for us.
Yeah, and definitely not an easy time, to be looking for funds with cost of borrowing sky high with all the central bankers raising rates.
Like you said, it's not, farmers are not, it's scary. Let me also be honest. For some of us, like my company, we made a policy at one of our board meetings last year that maybe this is not a good time to be taking loan for projects.
Definitely not a good time, yeah.
Not a good time, and this year again, we've attended some seminars, some business meetings, and they're saying probably not a good time. Yes, everybody is saying, let's see what comes in the new administration. And so it's really, so you are scared as a farmer to go and get a loan for your project. Yes. Even though let me give an example again. My company is going into mobile processing of cassava, where you get mobile equipment, take it to the farms at different locations so you can reduce post-harvest losses. But we probably need some capital injection into such. But you are looking at, okay, I need 75 million to get a unit. Am I going to get a loan for this? What if the rate changes on me? Will I not become, have credit bureau issue where I will now become blacklisted and I'm not creditworthy? So this is May. We've not bought the equipment. I'm sure so many farmers are still struggling. I still got a call yesterday. So many farmers are, having issues of taking their product or moving them out of their farms. These mobile units would have just been taken to their farm, convert their cassava to starch, to chips, to gari, to fufu, and then take it to off-takers. But you can't do that because you are scared of taking loans at this time.
Right. So the fear of loans. All right.
Body language that gives us that confidence.
Okay. All right. We'll have to leave it there now. Thank you so much, Mr. Tunde Banjoko, MD, Banjoko Farms. It was great having your perspective today. Thank you.
Thank you so much, Laddie.
So yeah, that's it. The fear of taking loans at this time with rates sky high. We'll take a break now. When we come back, commodities market update is next. Do stay with us. This is Business Morning. And for commodities market update, now join me is Bolale Agbaje, Senior Analyst, Financial Derivatives Company, joining me right here in the studio. Great to have you, Bolale, and I'm sure you were listening to our previous discussion there. I don't play with food. I don't know about you, but I was scared. When the World Bank is, warned about
One thing to point out is that they've always said this in all their reports. Every report they release on Nigeria or anything that has to do with Nigeria, they never fail to mention the fact that the food crisis issue is lingering, because at this point we import a lot of our agricultural products and we're hindered by our exchange rates, hindered by so many activities within, the agricultural sector that is crumbling, our food supply. And it doesn't stop population from growing the way we're seeing it in the country. So it definitely calls to question what happens to our food supply in the short to medium term and obviously the long term, the next generation as well.
Maybe it's time to have little gardens in your backyard. Maybe you can grow some of your...
It would make a lot of sense, because I know a lot of countries, in the West, that's what, they do. You have some people that feed themselves from their farms at the back, and that I don't think we see that a lot happening in Nigeria.
Yeah, I need to work on that. All right, let's look at wheat now. We see good news today.
Yes.
The grain deal extended by Russia.
Yes.
I'm sure we expected it to be renewed,
yes,
even though there were fears.
Yes, because it doesn't favor any one of those countries if that is not renewed. I'm sure a lot of their external reserves comes from the sale of wheat, and also for the global economy as well. We saw how when the war started, how wheat prices really skyrocketed, and now wheat prices have dropped by about 37%, which is great for us as we are, major consumers of that particular commodity. So all in all, it's good news that the deal has been renewed and there's some stability in, when it comes to wheat.
But I remember, Russia, they were asking, for some they wanted some things to renew this deal. And do you think the EU and the US did shift some ground to actually make this happen?
There are probably things that have happened, you know, behind the scenes. But I know, obviously, as time goes on, but it's just extended for about 2 months now. As time goes on, when they're trying to renew, I'm sure Russia would obviously, you know, take into account what favors them in terms of, you know, continuing this deal.
Right. Anyway, I guess there's still more to look out for, you know, with that deal.
Yes.
But yeah, it was a tough first quarter right here in Nigeria. And we're expecting GDP numbers for the first quarter next week. I'm sure analysts have their forecasts.
Yeah, so
how bad is it, or good, or better than expected?
It's funny that you say bad, because we all know what happened in the first quarter.
Right.
You know, the economy was stifled. We do expect that GDP numbers would drop significantly to about 1.25%, and it's clear that, you know, with the cash crunch, productivity was hindered. You know, there was just so much going on, so much disturbance in the, you know, within the country, and that obviously would feed into the numbers. But all in all, we've seen recovery in Q2, and so we do expect that there'll be some sort of pickup. Although, you know, like GDP is a lagging indicator, we've lived through the storm, and so now it's just time to move forward and see what, you know, the new administration does going forward. But all in all, our prediction is that, you know, GDP numbers will drop to about 1.25% in the first quarter of 2023.
So that's 1.25, that's the forecast.
Yes.
Do you think the MPC, they're also meeting next week,
yes.
do you think they're going to take any of this into consideration?
Of course, they'll take that into consideration, and, you know, they understand that it's a lagging indicator as well. So whatever they're doing with interest rates now is more or less to affect, you know, inflation numbers from the previous result that we had seen and going forward. So they will definitely take it into account, but I don't think it would, you know, affect their decision so much in terms of, you know, not increasing interest rates or keeping interest rates the way it is at the moment.
Because I remember in the US, you know, the whole point about getting the Fed to actually pause on rate hikes was because they believed the Fed was about to break something in the economy or had broken something. But what if the rate hikes here, has it broken anything in Nigeria?
You know, the GDP numbers that we're expecting is still positive. So it's not a situation where we're, you know, trying to go into a recession or anything. I think for the central bank, their major priority would be the inflation numbers. They're going out of hand. Some analysts expect that, you know, these numbers will peak at some point. But at this point, 22% is very high, and it's the main priority for them. So I don't think it will take precedence over the GDP figures for sure.
All right, let's look at the oil market now. We see Brent, that's down about 0.55%.
Yes.
It looks like it's going to be a losing week for Brent.
Well, the week is almost over.
It's almost over.
Yes, but you know, this drop in oil prices was obviously as a result of the unexpected, you know, increase in the strategic reserve by about 5 million barrels per day. And, you know, I mentioned, you know, on Tuesday, the fact that, you know, the US is trying to build up its reserve at the moment. So that increase in supply was obviously fed into oil prices. But all in all, the IEA, from their monthly reports, they did, you know, release some positive news. They do expect that, you know, the demand from China would increase significantly. And also the fact that most of this demand will actually be driven by China by about 60%, which is great for us. And the fact that, you know, as much as, you know, we've seen supply, demand, you know, fundamentals within the economy, but we do expect that, you know, the next meeting for OPEC Plus, they will definitely take that into consideration. And they did also mention that, you know, towards the second half of the year is going to be positive news for oil prices. So we're sticking to that, and we're trying to be optimistic about oil prices going forward.
Yeah, quite interesting. Let's look at the Naira now. We see it appreciated about 0.27% in the parallel market, 752.
Yes, so it's not necessarily nice for us, but there was a report that was released, I think Bloomberg quoted that, and they did mention that with this new administration, they're expecting a devaluation by about 15%.
Official?
Yeah, official rate.
Okay.
And obviously that brings it to about 530 Naira to the dollar, which is good news for us. It's not necessarily great for the economy, But all in all, going forward, it means that in both potential and new, investors would more or less be more confident in bringing their money into the country.
And hopefully not more than one window.
And hopefully no more than one window, because when you have that devaluation, although the devaluation is specific, is actually supposed to be way more than that, but we do hope that with that little devaluation, we can be closer to, merging these multiple exchange rates that we're seeing in the market.
All right.
And the good news, continues from there.
All eyes on the incoming administration.
Yes.
I guess every move they
2
make,
weeks,
watch them like a hawk.
We need to watch them closely.
Thank you so much, Bolonle,
the
senior analyst, Financial Derivatives Company.
Thank you.
All right, so we'll take a moment now. Business Morning returns in a moment. Do stay with us. Welcome back. Let's head on to the markets now. We have Anyete added with the details. Anyete, great to have you. Final trading day tomorrow morning. We had a positive close again yesterday. It looks like it's looking like a positive week for the NGX this week.
Yeah.
Fingers crossed, though.
Yeah. Let me just. We had a review on capital markets where we had an outlook for the markets, and we were expecting that there's going to be mixed trading. And like I'd always say, the market has a mind of its own. Just when you think about it going this direction, it goes the other direction. And so far, it's been able to maintain a positive trajectory for a third consecutive day. So, and that's because investors are actually...
I guess that's why it's so hard to beat Mr. Market going forward.
And at the same time, it's coming days after the inflation report. So it says defied the inflation report, and investors are actually keying into the equities market. But I'll be talking first about the fixed income market and that bond auction, which we had on Monday. So for the fixed income market, we're starting first with the bond market auction. With the bonds market, to be precise. So it was with mixed sentiments. We also saw a bullish tent. We saw a bullish tilt. We saw at the average yield had contracted by, it fell by 1 basis point to about 14%. And then, of course, we also saw investors demand the March 2027 paper. It was down by 7 basis points. And the March 2035 paper, it was down by 15 basis points. But when you look at your board there, the 27th of March 2050 paper, it had the most attraction there. What you see here, 13 number of deals carried out there, 10.3 billion naira, that's the value. And that was the major contributor to what you saw here. We had a total number of deals carried out there at 42, but the total value, which was largely driven by the 27th of March 2050 paper, 27.58 billion naira. So that was the amount. Now, over to the Treasury bills market, we saw a kind of a bearish sentiment there. Average yield expanded by 5 basis points to about 6.7%. So that's it for that market. When you see the 7th of March 2024 paper, it had 6 deals, 8 billion naira, cumulative 49.63 billion naira. So for that market. And then let's move over to the open market operations, just only 1 deal. That's for the 26th of December 2023 paper later this year. So that was the loaner there, 16.82 billion naira. And moving over to the central bank special bills, we saw just a bit of activity there. And before I go to our guests, we'll be talking about the equities market. It continued the positive momentum. It was up by 161.53 basis points. That's approximately 0.31%. And in terms of value, that was up by more than 87 billion naira, about 88 billion naira. So, and we had the likes of the trio of Fidelity Bank, Access, as well as Transcorp being the major contributor. But now let's talk to our analyst today, Tajuddin Olayinka of Wyoming Capital and Partners, to give us more insight about the market. Now, Tajuddin, good morning. You're at the exchange. And by next week, this time next week, we'll be having a webinar of the FGN savings bond auction, FGN savings bond to be precise. So now, what can you tell us about this happening on the exchange's floor? Hello, Tajuddin, please, can you unmute your mic, please? Tajuddin, please, if you can hear us, kindly unmute your microphone, please. We can't hear you. Okay, so that's Tajuddin. We will get back to him once we get his audio back. Okay, all right. Tajuddin, thank you for joining us. Can you hear me now?
I can hear you clearly.
Okay. Yes, I was talking about the Nigerian Exchange will be having a webinar on the FGN savings bond next week. So why is it coming at this time? And at the same time, why is the NGX having a webinar on FGN savings bond and not just on stocks?
Okay, yes. It's actually to create awareness among retail investors, especially those investors who are not so, who don't have deep pockets, who can just, who ordinarily would love to put like 10,000 in savings account with banks and or maybe 100,000 with savings account with banks. So what has happened there is that NGX in collaboration with DMO, actually came up with this idea that let us bring these retail investors on board. There are investors who just want to put in even 5,000 naira, that they just forget. Normally they forget it in their bank account. So let them bring them to the market. Let them lend them to, give them the government to use, and then they can also have access to secondary market trading of some this particular instrument. It's actually to allow small savers to be part of stock market. And of course, equity market is in fact, bond market is as good as equity market. But this retail segment of the market is just a new innovation by DMO and NGS. And I think it's a good thing for those small savers, so that they can be part of market, they can be part of the market that they actually love.
Okay, so I think I'll just ask you just one last question. How keen, what's your perception? How keen will investors be for buying savings bonds in contrast to shares on the Nigerian Exchange Limited? And how lucrative will it be for investors in that space?
FGM bond or any government security for that matter is more secure than equity. Equity is very volatile. And some of these investors are not so savvy. They really don't understand the dynamics of equity market. And so sometimes, when they start losing money because of the fact that, volatility that is coming from exigencies of the market, so they tend to be discouraged. But this time around, this is just to encourage them to say, okay, if you are not too comfortable with equity market, you can also play small as well in savings bond. And savings bond has a minimum of 5,000 naira. That is at the primary market issuance exercise. You can just put minimum 5,000 naira there and maximum of 50 million naira. But in the secondary market, you can accumulate as much as you want to. You want to accumulate, by trading, also buying that security in the secondary market. So it's not limited to primary market issuance program. It's also that you can get more of that stock or more of that particular security, government security for that matter, in the secondary market. It's an interesting development, and it has been on for quite some time now. I think it came up precisely around that 2017, 2018 or so. It's something that some investors are quite aware of, but it's not so deep because we are not getting many of them participate in that market. So I think the essence of this seminar or webinar by NGS is to create more awareness so that some of these small savers who have just abandoned their money in banks account that they are nothing. Maybe they are getting 2 or 4%. They cannot come here and get about 10% or even 12%. It varies. It moves with time. It moves with the dictates of the economy. So it's something that will really interest and make them more happy.
Okay. Thank you, Tajuddin. I think we'll leave it there. And of course, our eyes, like I'd always say, is always on the market. So, Ladi, I know time is never my friend, especially in this segment, but just a bit, that FGN bond, because we're talking about the FGN savings bond, but for the FGN bond auction carried out on Monday, there was an over-allotment. 368 billion naira was allotted by the Debt Management Office, in contrast to 360 billion naira sought by the federal government. So that's it.
All right.
That shows that the market
that's where the money is right now. Thank you so much, Anything. Thank you. All right, PoliticsToday giving us details from the NGX and fixed income markets. Let's head on to the UK now. We have Juliana standing by. I hear Prime Minister Rishi Sunak is on the move right now. Juliana, I heard he arrived in Tokyo. What's he there for?
Good morning, Ladi. You're absolutely right. Prime Minister Rishi Sunak is in Japan for the G7 summit, which is going to kick off tomorrow. It's a huge summit, of course, because we know that the Ukraine-Russia war is heating up. So the G7 leaders will be talking about the Western Front. But on the sidelines, as you quite rightly said, there was an announcement by Downing Street today that in Tokyo, Prime Minister Rishi Sunak has managed to secure £17 billion worth of investment from Japanese businesses into Britain. I've got to tell you, this is a mammoth vote of confidence for Prime Minister Rishi Sunak, who, if you're living in the UK, people should know he is under significant political pressure. Within the next 12 months, we're expecting a change in government from the Conservatives to the Labour Party. And it's all about Britain's beleaguered economy and the fact that even though we're not in a recession, we are limping along. So I think this £17 billion is a huge boost. He's been speaking about that across British airwaves this morning. And of course, another big talking point is going to be about Brexit. He is expected to meet Nissan bosses tonight, where he's going to be hosting a reception for them and for other Japanese businesses. And this is really significant because, of course, yesterday we got that warning from Stellantis, which is the parent owner of car firms such as Vauxhall and Peugeot, and they were basically saying they will have to leave the UK market if these rules of origin legislation comes into fruition next year. This is all part of Brexit and the fact that if you want to build an electric car, most of the components have to be locally sourced. We're not really building any electric battery factories. That's a huge issue, and I know that's going to be something that Rishi will be discussing with Nissan bosses. But £17 billion, huge story, huge win for Britain's transition to going from a low-skilled migrant labour force into being a high-skilled, high-wage economic powerhouse.
I'm very sure we're going to get more updates at 1:30 on the visit. But we see there's still more layoffs happening right there in the UK. We see telecom giant BT, they're set to cut about 55,000 jobs in the UK and globally. I guess that's good for investors, but bad for the workers.
Yeah, you say good for investors, but BT, their share price has fallen about 8% on the UK Blue Chip Index this morning. So I don't think today's announcement has done enough to win investor support. But quite rightly, you said, alongside their trading update, they have announced that by the end of the decade, so within the next 7 years, up to 55,000 of their workforce is going to go. A lot of this is to do with artificial intelligence, which is a massive conversation at the moment. What happens to customer service? Well, we see that those jobs are going to be going. On Monday, I think it was you and I talking about Vodafone and the fact that they're also going to be cutting 11,000 from their workforce so they can become more competitive. And that's exactly what BT bosses have said this morning. They said they want to become a much slimmer, much leaner, more green-focused business, which is why they're having to make these job cuts. They're going for a pretty tumultuous time at the moment because, believe it or not, there are still certain sectors of Britain that can't get decent internet. And BT, being the biggest broadband and mobile internet provider in the UK, must fix that. They are transforming their cable systems with BT Open Reach, which is heavily delayed and heavily overfunded. But yes, not great. Another announcement that 55,000 jobs will go. It is going to stagger, but certainly if you are working for customer service at BT this morning, you would be pretty terrified to hear that.
Yeah, quite nervous at this time. Thanks so much, Juliana. Always great to hear from you. See you at 1:30. All right, let's see what's happening in other markets now. We see the crypto market there, Bitcoin still struggling below 30,000. We see the market still looking for direction. Neutral is the sentiment in the market, looking at fear, greed index, 51 points, still ranging between neutral and greed at this point. We've not seen greed for the past couple of weeks now, but now it is neutral. Let's look at the top currencies we track. Bitcoin up 1.03%. Seen a bounce there, $27,246. Ethereum holding up also 0.14%. And we see XRP giving up some gains from yesterday, from that big 6% rally we saw with that news on the SEC case in the U.S. Cardano, that's moving up 2.34% at 37 cents. Let's bring in Michael Enaji now, financial market analyst. Hello, Michael. Great to have you.
Thanks for having me on.
Fantastic, Michael. So it's still about regulation, and the U.S. We're seeing Binance that have had to close shop in Canada. Actually, they've had to pull out of Canada. It looks like it's getting really choky for this industry with the whole regulation discussions.
Yes, it doesn't bode well. Binance leaving Canada. This isn't new information in regards to Binance and their not being available in Canada. Ontario, for the past year and a half, has banned Binance out of the province. So anyways, that Ontario represents the largest province in Canada. So the writing was already on the wall. So this closure isn't really surprising. However, though, it's because of new legislation that the Canadian Securities Agency basically dictating anyone who wants to buy stable coins on any crypto exchange has to go through a crypto exchange that's vetted by them, and there's due diligence that's done by them. The only unfortunate thing is, unfortunately, Binance and a bunch of other companies voluntarily left the market because they didn't want to go through this process. Maybe it would involve things they weren't comfortable with, but it's definitely not a good sign in the market, especially for investors in Canada, for them to see Binance, which is the largest exchange in the world, currently leave because of regulatory pressure. It's a big choke to the entire industry.
All right, but is there some confusion about regulating crypto? We have some of them are, decentralized platforms, some are centralized. Do you think there's some coins or cryptocurrencies that will not survive regulation?
I don't think that there's cryptocurrencies that will not survive regulation. I think if under the current regulatory framework, every cryptocurrency project except Bitcoin currently is dead. So I do fundamentally believe they won't survive under the current regulatory regime. The hope that everyone has in the crypto industry is that new rules and new frameworks will be implemented to understand this new asset class better and form a better structure and a framework around it. But the current rules, how they're created around securities, will basically kill 99% of most of these crypto projects if they're deemed to be securities. So it's in the industry's best interest that lawmakers go back to writing new legislation that completely changes the entire way we look at these assets. Because as it stands, securities laws that were created in 1930, while they're a good testament to protecting investors, for something like this, I think new harbor laws, new things that could allow a sandbox, for instance, that could allow new technology to go and survive and see how that would be a one way to go. But definitely new framework and new legislation is needed to make this thing work.
All right, Michael, I guess we'll keep tracking to see how all of this regulation discussions go. Thank you so much, Michael Enaji, financial market analyst. Thank you. All right, let's see what's happening with top gainers now. We see Render token, that's up 16.87%. The only double-digit gain we have on the top 100 coins in the crypto market. SNX, that's up 7.72%. And we're seeing Mask, Axie Infinity, back in again is counter, not seen that in a while, 5.31%. So there might be some metaverse narrative coming back to the crypto market. And we see the meme coin, the new kid on the block there, Pepe, down 5.70%. Mana giving up some gains from yesterday, 50 cents down 2.60%. So that's how the crypto market is looking today. It's still looking for direction, still neutral. It's what we have right now. Not bullish, not bearish, just neutral. All right, that's the show today. Thank you so much for watching. Don't forget to join us at 1:30 for Business Corporate. More updates and developments in the world of business. And you can watch this again on our YouTube channel. Just flip over to YouTube, search for Channels Television, click on videos, and you can watch all our productions. Thank you for watching. I'm Ladi Williams. Bye-bye.